I want to start off not so much in the macro picture. I want to talk about the property market. That's a very hot topic right now. And I guess this to premise here for our viewers that, the housing market makes up such a material part of output that it becomes difficult to discern whether the problems there are a cause or a symptom. I'm sure you're following what's happening very closely. What's the core problem right now in the property market?
Right, thanks for having me, David. The core problem initially, it was, as you said, this time last year was more of a housing sector problem. But at this point, it's actually pretty remarkable. We have had this housing slowdown for a year now, and up until now, it looks like the credit spread widening was mainly in the property sector. We didn't really see stresses in the interbank market or elsewhere. So it is quite an interesting dynamic. But the latest news does suggest that a lot of the problems weren't really solved yet, and the recovery is still quite fragile, especially given the other type of headwinds facing the Chinese economy.
And in your assessment, what are the short-term solutions, and can we be confident that those solutions will work?
Yeah, I think right now, if we look at the headline news that mortgage or home buyers, some home buyers refusing to pay mortgages, the problem there was that these highly levered and cash-strapped developers may not be able to continue construction or finish the project on time, and that's the sort of the gist of the problem at the moment. How to solve that problem? You saw that over the weekend, the regulators came out reassuring the market and also asking banks to lend money to certain developers to continue construction. So if that's the problem, continuing construction, delivering properties on time would be the solution, narrowly defined. But the bigger picture is that we have these private developers which play a significant role in the housing market, and investors in the market are not sure what the end game is, how exactly we're going to find a solution to these developers. We can, at this moment, continue lending and making sure they finish their projects, but down the road, what's the resolution? What's the end game for housing for living in, not for speculation? There's still a lot of questions in investors' mind.
Right, and what do you think that will have any implications on whether that's central or local government budget deficit targets? Do you think that's going to show up as far as fiscal support is concerned? When you come to sort of China financial market and fiscal spending, it's a sort of there are different ways for the government to pull up resources, whether it's coming through the banking system, which wouldn't be showing up as a fiscal number, or is coming from some kind of a local government or even central government resource, which would show up in the fiscal number. There's a lot of uncertainty how exactly they figure out the source of a funding or how do they support these developers. That said, I think right now is a financing problem for these developers to continue construction, and they should be able to find a way to solve that problem, because the alternative is quite concerning. If you think about this as negative feedback loop that home buyers are not buying from these private developers, worrying that they are not going to be able to finish the project. And therefore, these private developers are facing even more cash flow stresses because pre-sales are a main source of funding for them. Then you just get into this negative feedback loop. So I think the core issue here is for the government to step in quickly to boost confidence, to solve the problem at hand, and also providing more clarity to the market, to broader investors, how this downturn in the property sector is going to get resolved. Yeah, and we'll see, of course, and wait for more announcements as far as this specific issue is concerned. I want to just change topics and talk about employment. They've talked about that a lot. That seems to also be a priority. Youth unemployment is very, very high. Could you just explain to our viewers and us, too, why is employment such a big issue right now? Yeah, I think if you think about the Chinese government's objective to support growth and boost the consumption, you got to ask ourselves, where is the consumption going to come from? The consumption is going to come from income and confidence for people to spend their income. And employment is right at the core of income. If you have a very high unemployment rate or underemployment problem, because anecdotally, some workers, even though they have a job, their salaries are being cut. So if you don't have the income, that's going to translate into less consumption, less growth, less demand, and also that confidence of businesses and households are going to translate into investment decisions. So that's why this is so important, both to the economy and to social stability.
Talk about your growth target as a final question, and what is going well. Let's try to end on a fairly pleasant note here.
Yeah, exports have been going well. If you look at Chinese goods exports versus the Bloomberg consensus expectations, for 11 months in a row, exports have surprised to the upside of consensus expectations. So when we look at the items China has been exporting, it's interesting that the desynchronized nature of external demand, for example, before it was a COVID-related product, and now it seems that the reopening-related products are benefiting Chinese exports. So that part of the economy is doing well, although uncertainty is also significant as we talk about the U.S. recession risk, Europe recession risk. If we do head into a recession for the U.S. and Europe, Chinese exports will suffer as well. So adding everything together, we're expecting 3.3% growth for this year.